There is a third strategy that you can use to trade trends and trend reversals, and it's known as the naked rhombus, which means that you don't have to do all that fancy drawing, and it's called the SS, okay? It's kind of getting a rebrand of a name, formerly known as the Smurf and Swerve, all right? We're going and just calling it the SS. It's just simple, it's cute, and it's like that. The reason why you don't really hear me talk about terms to do with the village is because we're now going to go through a rebranding process, okay? And so it's going to be called the SS. Same rules as before, but if you haven't heard of it, we're going to break it down to you. So the SS is where you have three distinctive highs or three distinctive lows that are taking place in the market. And what you are doing is you're looking to catch trend reversals. Okay? Can everyone put in trend reversals into the chat box? Trend reversals. Trend reversals. This was used to catch nice trend reversals, just like the rhombus, but some people just want to be able to draw things quick, sharp. So we're adding the SS into it. Hashtag SS, oops, dollar sign, whoops, SS. And it's driven by three highs or three lows before a reversal. Now, this is not to be mistaken for a head and shoulder pattern. Okay, because head and shoulders have different rules that are governed by it. The SS has different rules. I'm going to show you the differences between the two at the end. So let's draw this so we know. Okay, we still have an A to B move, but what happens here is that it's forming a first high. Okay, so we're going to do the example for the highs, driven by three highs or three lows. And so we have a high over here. And then we have a low over here. Now, what's going to happen is that the market is going to form a higher high. But this time, when it comes back down, you're going to see that the market has formed a higher low. The third high that comes is going to be a lower high. When this lower high is formed, then we can now get ready to trade our strategy. When you are trading going from a high down to a selling opportunity, what you need to make sure is that you're going to have a trend line that's going to help you determine when to enter the market and where it's going to go. So what are the tools that you need to be able to use the SS? You need tools, you need 2 trend lines, 1 horizontal line. That's all you need. So the first trend line that we're going to use is connecting the lows together, and look at the angle that the trend line is on. It needs to form as a counter trend line where price and time clash. Okay? Drop a Y or a yes if you are understanding this. Price and time needs to clash. It means that this trend line is posing as a counter trend line, not a trend line where time and price are going in the same direction. I hope we understand this point. I don't want to see anyone drawing this where price and trend are going in the same direction. So now you've used your first trend line. Now, the other thing that you need to be able to know is where is it going to go? When you're able to know where it's going, then getting the entry is nothing, okay? So what you will do is you will get your trend line and you'll mark the bottom of the previous move that led you to the first high. And then what you're going to do is that you're going to move this distance so that this distance is at the lower high. Okay, now you've been able to make the projection of where the market is likely to go. So now I've used my first trend line to mark the counter trend. I've used the second trend line to mark where it's likely to go. And the horizontal line is just being used to be able to plot your take profit. So the horizontal line's job is just plotting the take profit. Where am I heading to? I need to see a number so that when I'm on my MetaTrader 4, I know the number I am going to. So now what is the condition of entry and where should you set your risk? When price breaks this trend line, what should take place? What should take place? Very good. You all know it. It's a retest. So what happens here is that there should be a retest of this structure, this counter trend line structure, that should help you with your entry. Remember, no retest, no entry is what we often go by. So now, if you are entering, what are you entering as a trader? Are you looking to sell or are you looking to buy? It's a selling opportunity. Very good. So now you're looking to sell and you already have your take profit in mind, which is down where your horizontal line is. Now, where do you put your stop loss? It's just like the rhombus. It's subjective to the user. But you can set your stop loss above the lower high. How many pips is up to you? Wrong tool. So it can be 20 pips, 30 pips, 50 pips, whatever it is, you determine that there. It's highly unlikely that if you've done this correct, that price would reverse and hit the stop loss. But it's always good to have a stop loss just in case. Okay, that is how you are able to use the SS. So if you cannot draw the rhombus, or sometimes you can't even find a rhombus, the next best thing is looking for an SS. Now, what's the difference between this and a head and shoulders? Let me tell you differences because they're not the same. Head and shoulders. 1, 2, 3. SS. They both seem to have necklines. They both seem to have heads. They both seem to have shoulders, but there are distinct differences between the two. Let me teach you. First and foremost, in order to get a target for a head and shoulders, there are two schools of thought. The first school of thought is that you get the distance of the head to the supposed neckline, and then you drag that distance down to form your next projection. Other schools of thought will teach that you have to get the distance of the shoulder to the neckline to create the distance below the neckline to make your target. That is the traditional setup of head and shoulders. But generally speaking, the focus of a head and shoulder pattern has to do with the head because it's the biggest distance and they want to make sure the head is the target. However, when it comes to the SS, the focus is on the shoulders. We're using one shoulder to support the other shoulder. Can everybody see the difference between the two? Head and shoulders has to do with the head and it takes a long time to form. The SS is a shorter time to form and you're focusing on the shoulders, and even measuring the TP is quite different. Type in a Y or a yes if you see the differences between the two. I hope everyone can see the difference between the two. Great. So let's see what it looks like the other way around. Having a buy setup, you have a low, a lower low, and then a higher low. And you can see that the trend line that has been drawn should act as a counter trend line, which means that price and time must clash. This is something that a lot of people get wrong, and I don't know why. It cannot be facing this way. Please don't make it face this way. If you have a situation where it looks like this, it's not tradable. Don't trade it. It has to be facing down. Okay, now what are we waiting for? We want to get our projection. First trend line has been used already. Second trend line is now used to get the projection. Get your horizontal line to mark where your target is going to be. You have your stop loss, which is below now the higher low, and now you're waiting for price to break and then make its way to the target. I see people in the village just trade S and S's alone, and they make like 800 to 1,000 pips easily, because these things always form. They're easy to draw, easy to set up. You can even make it an auto trader for yourself. It breaks the structure, have your sell stop, have your sell limit, have your TP, and you just go about your life. Okay, so let's look at an example on the chart, and then you got homework to do. Yay. Many people have seen this example before. I use these examples because it has different types of setups that are there. Okay, so let's look at this. Remember, you have to try your best to go by the wicks, but in cases like this, it gets very, very hard. But let's, for example's sake, mark the counter trend line like so. So what are we going to do here? We have to identify the three highs. I hope everybody can see them, but for the purpose of teaching, high number 1 is over here, high number 2 is over here, high number 3 is over here. Very good. You have your stop loss that is being, put above that high, make it red, and then you have your entry just below here. So we have these things sorted already. It's now about the destination. So what do? We get the distance of what happened prior, trend line, from the bottom to the first high. And then what you're going to do is move it from this high to the lower high. Can everybody see that? Drop a Y or a yes if you can see that. Now, what's interesting about this particular take profit? What's interesting about this is that you can see that there is an engulfing candle right where the target is. And you can see that it's engulfed 2 candles of the opposite team. So we're dragging this all the way down to where the wick is. Now we see that there is a zone at the bottom. And remember what I said, that engulfing candles are a reference point. They either come from or they're going to an engulfing candle. You can see another one over here as well that is a reference and has resetted already. There's one over here, bang, and now another one has formed over here. So there is a likelihood that sooner or later, price may go back and reset at that point, okay? Now, let's see what this does if it goes towards our take profit. Let's see the distance from here all the way to where the trend line break is, 206 pips. Very good, not too bad, all right? Let's see what happens. It wasn't even close to the stop loss. Bang. Okay. Didn't go all the way, did it? There you go. Bang. Hit the TP. See, it didn't even go close to the stop loss. So what happens, Dave? You saw it last week. When you're in profit, move your stop loss down so you've protected what you have made and let the trade ride out to get to its destination. Now see what happens after this. You will begin to see something form very soon. You can see a low. You can see a lower low. And then you've just seen the higher low take place. Okay. So now we do the same thing. We get our distance, go from the top here all the way to the bottom. That's one solid move. And now we're moving this distance to where the higher low is. And can you see how this projection is now going towards the engulfed area that has yet to perform a reset? It's amazing how these things just work out. So now what are we doing? Connect two highs. Put your stop loss maybe like, I don't know, that's like 800. So let's say 40 pips. That's what 40 pips looks like, okay? Your entry can be the retest or as soon as it breaks the counter trend line. That's up to you. So let's say the entry is over here. And let's measure the entry to where the take profit is likely to go. Entry, take profit. 227. This distance is actually bigger than the previous distance, okay? Let's see what happens over here. Entry. Entered the market. Things are looking so good. Then, oh, it fell down. But look and see where the stop loss is. Look and see the security over here, okay? The market has now been able to move up. I can move my stop loss to maybe break even. Let's see if it doesn't hit our break even point. And you can see that it's heading towards our destination. And you can see impulses and corrections taking place. Okay, and now what you also see is another swerve now forming in the market. Okay, let's mark these impulses and corrections taking place. Impulse, correction, impulse, correction. And what have we learned about these impulses and corrections? You make your decision in the corrective phase. And you can see clean breaks going towards forming another high, another correction taking place, a higher high. Now you see that, will this high match the other one? You can see that this high is just a little bit higher than this one. So you can form your swerve. Get your trend line. It's already broken, not to worry. What we can do over here is get the distance from this high, or this low, sorry, all the way to the first high. Move that distance towards the lower high, okay? You now have your take profit. Stop loss can go above here. Move the counter trend line. Horizontal line is over here. And this one looks like it's shorter in distance, but let's say it's about here, 175 pips, okay? You can see a break of that counter trend line, and let's see if it heads towards that distance. You can kind of see like a small impulse and a correction taking place like so. You can see a break of that. You can see the retest, and that retest looks like an engulfing candle reset. This one over here. Boom, hit take profit. Okay, I mean the SS is so cool to be able to trade. So look at all of that. If you're able to find the 3 highs or the 3 lows, you know where you're going to go. You know what your risk is. You just enjoy the journey. Is that something easy to be able to remember? If you think it is, drop in easy into the chat box. So, assignment time. I'm dividing the assignment into 2 parts. Only pick the assignment that's relevant to your trading style. Range, trend. Range traders, find 5 rectangles. Note those rectangles. So does it have a support, a resistance, a pivot line, etc., etc. I want to see that you're able to identify what are part of those rectangles. Okay, so that's easy. 5 rectangles. Find the range, draw the rectangle, etc., etc. If you're a trend, guess what? You have options now. It's either going to be rhombus or it's going to be the SS, and you just need to find 5 of those. Find 5 and draw them. Are we good with that? If you're a range trader, your homework is to just find 5 rectangles and note them down, note whatever it's inside and all that stuff. That's part 1. And the trend is find either 5 rhombuses or 5 SSs or 3 SSs and 2 rhombuses. Whatever the order is, it should match 5. Once you are done with that, remember I said it's part 1. Part 2, whether you are a rhombus trader or a rectangle trader, part 2 is to mark out all the resets and retests that happen in your strategy. Mark out all the retests and resets that happen in your strategy. So like I did with this particular one, what I was able to do is engulfing candle over here, engulfing candle over here. It became a reference point in the future. Okay, I'm sure there's an engulfing candle somewhere here. Bang, over here. Becomes a reference point for the future. So what I want you to do is now fully mark up your chart with the given strategy that you are comfortable with, and then mark up retest evening. I pray a profitable trading week. I know it's going to be a great one. And as usual, see you guys all on Telegram. Bye-bye. So don't really never lie.